Hey trader, welcome back to mfstrading. In this video we will be going through the perfect indicator to double your profits. As usual, we'll have plenty of practical examples. The idea is to fully understand this wonderful trading strategy. The very important point that everything we discuss in this video can be used for currency trading, stock trading and crypto trading. Because price action stays relatively consistent across different assets. So we're going to go very in-depth in this video. Before starting today's video, you can support us by using the links below the description, or you can also join Telegram to receive free daily signals. Let's get right into the video in this trading strategy. The moving average is one of the best trend-based indicators out there, known for its simplicity and accuracy in identifying the speed and change of price movement. This indicator can sometimes work decently even on its own. However, there is an improved version of the moving average indicator that also takes market trend reversals into consideration. This indicator is called mfstrading. In this video we're going to explore what this indicator is and how we can use it to spot potentially profitable trades in the market. First, go to Tradingview, choose a pair of currency. For example, Euro USD, with 1 hour time frame. If you need to sign up, the link for that will be in the video description. Next, open the indicator search tab and type in mfstrading. Select the one by Lux Algo. The mfstrading indicator highlights potential trend reversals based on the direction of the moving average. Detected reversals are accompanied by an extrapolated saber-shaped pattern. That can be used as support or resistance and as a source of breakouts. This indicator is composed of several different components. Let's go over them quickly. When a specific moving average maintains its trend for a certain period, a shift in that trend might indicate a potential reversal. This shift is visible as a distinctive saber-shaped pattern. This saber pattern can serve multiple purposes, such as acting as a support or resistance level, indicating a potential new direction, or even serving as a stop-loss point if the price is expected to move in the opposite direction. To identify these shifts, we'll be monitoring the EMA to see if it constantly moves in the same direction for a set number of consecutive bar. Once this occurs, we'll draw a circular shape 1 bar back, using the previous high or low depending on the prior direction of the EMA. This circular shape forms the basis for the saber pattern. The tip of this sabers extends as far as the user defined the EMA length. The angle of the saber is determined by the average true range of the previous 14 bars. If the previous 14 bars were less volatile, the same sabers will be flatter. And if there was greater volatility, the sabers will be more angled. Now that we know what this indicator is made of, the next question is, how can we use it to trade? Well, I'm going to show you, but before that we need to customize the settings of this indicator to suit our strategy. To do that, just double-click on it to access the settings panel. As you can see here, the first thing that we can change is the method of the moving average being used. Now this indicator offers different types of moving averages you can choose from. And if you select the None option, it will remove the indicator from the chart. So you should consider not doing that. You can experiment with the different types of moving averages to find the one that best suits your trading style. For these settings I use the triple exponential moving average. TEMA aim to reduce the lag associated with traditional moving averages by applying a triple smoothing technique, making it more responsive to recent price changes. This can be useful for identifying potential trend reversals or accelerations. So we'll leave it at that. Also, we'll maintain the original length at 50. I will keep the trend duration default settings. For the colors, I prefer to use colors that differentiate the indicator from the candlestick chart. For a bullish, saber blue is a good choice, and for a bearish, saber yellow is a suitable option. We won't be making use of the MA color, so go to the style and uncheck the MA, aiming for clean charts. Lastly, ensure your polylines are active, as inactive ones might make it hard to see the MA saber on the chart. That covers the indicator settings for now. Now let's discuss how this indicator works to identify trend reversals in the market. Whenever we get a new yellow saber, this indicates two things. First, it signals that the price is likely to reverse from a bullish move to a bearish move. Secondly, it could also serve as a resistance level. If the price breaks the resistance level, then we expect prices to continue moving upward. The same principles apply for the opposite signal. When we get a blue saber, it indicates two things. Firstly, it suggests that the bearish movement is likely to reverse to a bullish move and continue moving up. Secondly, this blue saber line would serve as a support zone. If prices break this support zone, it is likely that prices will continue moving downward. We'll use this indicator to trade by focusing on its support and resistance breaks, waiting for the price to break either above or below the support or resistance saber levels. For long trades, when the price closes above the yellow resistance saber and other conditions are met, we enter a long trade. Similarly for short trades, when the price closes below the blue support saber and other conditions align, we enter a short trade. However, for the strategy showcased in this video, using just the saber indicator to identify support and resistance breaks can sometimes lead to false signals. To avoid them, we need an overall trend identification in the market to ensure we only take breakouts that align with the market's overall direction. For this strategy, we'll need to add a moving average indicator. Open the indicator search tab and type in moving average exponential. Then select the one by Tradingview under the Technicals tab. We'll also need a buy-sell indicator, specifically the twin range filter by Colin MCK. Let's adjust the settings. Double-click on the EMA. And on the Inputs tab, change the length to 200. On the Style tab, change the EMA color to white and increase its thickness for better visibility. For the twin range filter, we'll leave all the settings at their default values. To trade using these combined indicators, here's how we'll do it. For a long trade, ensure the market is in a bullish trend by checking that the EMA 200 is angled upwards, and that the price is trading above it. This indicates an overall bullish trend. Within this bullish trend, we need the sabers indicator to provide a resistance level. We'll wait for the price to break above this resistance level, showing that there's still enough force to drive the price upward. We'll also need to see a yellow saber line above the EMA 200. Finally, the twin range filter should print a buy signal to indicate the possibility of the market continuing in the bullish trend. If the buy signal is printed outside the yellow resistance line, or if the price is below the saber resistance line, we avoid making any trades. For short trades, the conditions are reversed. Ensure the market is in a bearish trend with the EMA 200 angle downwards, and the price trading below it. Within this bearish trend, wait for the price to break below the support level provided by the blue saber line. Also ensure that the blue saber line is below the EMA 200. The twin range filter should print a sell signal to indicate the possibility of the market continuing in the bearish trend. Avoid making any trades if the sell signal is printed outside the blue support line or if the price is above the saber resistance line. In terms of entry and risk management, enter a long trade when all the conditions are met within a bullish trend. Place your stop loss below the most recent swing low and set your take profit at 2.2 times the risk. Let the trade run and take profit accordingly. Avoid signals triggered by large candlesticks as they often result in false signals. Additionally, it's advised to take only one trade per saber line print to improve money management and risk control. For short trades. Within a bearish trend, enter when the specified conditions align. Place your stop loss above the most recent swing high and set your take profit at 2.2 times the risk. Again, avoid signals triggered by large candlesticks as they tend to be less reliable. Traders, if you enjoyed today's video, leave a like to it and subscribe to MFS Trading channel. Good luck for you.